What's going on, everybody? Today is April 3rd, 2023, and in this video we're going to be looking at the PM macro and the rules that are associated with it. Okay, so first we're going to look at the time window. So the final hour starts from 3 p.m. to 4 p.m. and the optimal entry will occur somewhere between 3:15 to 3:45 p.m. So we're going to look second at the macro signatures, which includes the untapped FVG as well as the untapped liquidity. And then part 3, we're going to be looking at the profit taking rules. Okay, but first we're going to look at the macro signatures, the untapped liquidity. So you're going to be looking throughout the entire PM session at who has been the most profitable throughout the day. This will include AM session, the lunch session, and the PM session. And typically throughout the PM session, or the PM macro rather, up until 4 p.m., the algorithm is going to run a macro that will take out any form of liquidity that's been untapped so far. Okay, for this demonstration, you can see that during the AM session, a high was made, and during lunch, the sell stops were rated as well. So at this current moment in time, these short sellers have their buy stops resting above this high, and it's been untapped so far. So we're expecting throughout the PM macro that we'll have some sort of entry pattern that goes to tap this buy side liquidity. Okay, for this example, we have the AM that was made a high, lunch made the low, and then during the PM session we take out buy side liquidity right here. And for this example, we look again at who has been the most profitable throughout the day and what's been untapped. So at this current moment in time, the buy side was untapped, but we did run through it. So now we're going to be looking at sell stops. So you can see two potential targets for sell side liquidity, one right here and another right here, as both your targets for sell side that you could take partials or as your full targets for drawing liquidity. Okay, for the fair value gaps, you're going to be looking from a high time frame to a low time frame. So typically, you're going to be looking from the 15-minute down to the 5-minute down to the 1-minute. And in the most recent price swing, you're going to be looking for your fair value gap to form. So when the macro starts, we should see a retracement into this fair value gap that you can be using as a long entry up until the draw on liquidity. And sometimes this fair value gap will form during the macro time, and sometimes it'll form before the macro time. So you have to kind of adjust when your entry will actually be and where you will see the fair value gap form. Okay, same thing here. We have sell side as our target, and we're going to be looking in the most recent price swing from the 15-minute down to the 1-minute for a fair value gap to enter short. Now we should see some sort of retracement into that fair value gap where we can enter our shorts, and then our stop goes above the high, and we should be targeting any form of sell side liquidity that's resting below. Okay, for this example, buy side has already been purged up here, so we're going to be looking for sell side. The macro starts right about here, and if you look, there's a breaker as well as a fair value gap, and we start down here. You can use this fair value gap right here or this fair value gap as your entry to go short. So you can see where we retrace into the fair value gap and we displace nicely off of it. You can take partials here as well as here. Sell side has been purged with this black line, so we're going to be looking at buy side up here as our target. So macro starts, we get a couple good entries. This fair value gap is formed during the macro instead of prior to the macro. So if you look here, we have this order block as well as a fair value gap that you can use as your entries to displace at least up until this target. We're always going to be looking for at least 5 handled moves. Buy side above here gets purged, so during the PM macro we're going to be looking for sell side. We start this heavy move downwards and then the macro starts, and you can see during the macro formation we have a SIBI sell side imbalance, buy side inefficiency, fair value gap right here. We retrace into it, that's our short setup, and we can sell short, stop above here, and target the sell side liquidity. Okay, here sell side has been purged. We have the draw on liquidity going higher. Once again, we do not have any fair value gap that's prior to the move. So during the macro starts, we displace upwards, and in that time frame, we make this blue fair value gap, these 3 candles fair value gap, that can be used as our entry. So you can see at 325 roughly, we would trace into that fair value gap, and we displaced nicely off of it into the buy side liquidity right at 4 p.m. Okay, here we have another example where sell side has been purged already, so we're going to be looking for buy side, which is these relative equal highs up here. And if we drop down to a 3 and 4 minute, there is a buy side imbalance, sell side inefficiency, fair value gap that's resting in here. This is the 1 minute chart, so you won't be able to see it. But we do displace lower to get into it, and at 342 roughly, we dig into that fair value gap low. That can be our buy, and you can see that we do run back towards that, but we wouldn't be stopped out. You could pyramid into here, and then by 4 p.m. we do run into that buy side liquidity. Okay, same thing here. We have buy side as our target after sell side was taken previously in the PM session. So you can see the macro starts. We start heading up after bouncing off of this fair value gap, and in that wake of moving upwards towards the buy side, we do have a fair value gap that's formed with these three candles right here, this buy side imbalance, sell side inefficiency, fair value gap. And you can see late into the macro, we do dip into that fair value gap, and we can use that as our long entry up into deeper retracement of the buy side. Okay, right before the macro starts at 315, which is this gray line, we do have this small 1 minute fair value gap. And as soon as 315 starts, we rebalance it, and then two more times right after it, we go back into it, which is another pyramid entries, stop loss right below here, and then we do displace away from it and take out the buy side. Okay, here's a textbook example of the PM macro. Buy side already taken, sell side is the target, which is resting below there, as well as the new daily opening gap. So we have a 1 minute fair value gap that's before the 315 as well as that breaker. 315 starts, we retrace into it, that's our short entry, and we displace lower past the 310 low as well as the sell side liquidity. Okay, here we have sell side being taken and closing the opening range low, so our new draw liquidity are these highs up here, and you can see 3 p.m. starts, we retrace upwards, and then 315 is roughly here, and in that retracement upwards we have 1, 2, 3 fair value gaps that can be used as entry points. And you can see at the 315 we do actually dip into it, and this picture's kind of cut off, but we do actually retrace up into the drawn liquidity. Okay, here you can see buy side's already been taken. We have sell side targets. This 2 minute fair value gap and 1 minute fair value gap has also been left. So 315 starts, we retrace into it, short entry, stop loss above here, and then we also have a secondary entry at like 345 roughly, where we can pyramid, and then at 4 p.m. we do take out this sell side and this sell side. Alright, that'll wrap it up for the PM macro review video. If you haven't checked out the AM macro review, it'll be the first link in the description below. All credit goes to ICT. These are his concepts, and this is all from his research. Daily review video will be out tomorrow, so be on the lookout for that, as well as the Discord and Patreon release. And yeah, I hope you guys enjoyed, and I'll see you all tomorrow.